Liz, you downgraded Best Buy as a result of that. You say there's uncertainty in 2023. It doesn't justify the valuation. Give our viewers a little bit more sense as to why and what the reasoning was behind the call.
Sure. Well, thanks for having me on the show. You know, as we looked at our internal Bank of America credit card data for the last several months, what we've seen is an increasing shift in consumer behavior from spending on formerly wants and now more into needs, so gas and groceries, as you mentioned. And so some of the categories that fall into that discretionary bucket being, you know, consumer electronics, we've seen some pretty weak sales results in our data going through, you know, year to date, but accelerating into May. And so we had expected some weakness in March and April as we were lapping last year's stimulus payments, but then we didn't see any of that pressure easing in May, which was kind of interesting. Additionally, we also saw survey results that we run every 3 months turning a little bit more bearish as well towards those consumer discretionary type categories like consumer electronics. So our survey respondents said that they have a lower intention to spend on consumer electronics in the next 12 months than they did in the last 12 months, which means that not only is consumer electronics losing wallet share now, as our card data showed, but also that it's going to lose wallet share over the next 12 months as well.
You know, I look at the PE of the stock, and obviously I'm surprised in a way is how low it already is. But I guess that's typical of Best Buy to a certain extent. But, I mean, we're talking about, what, trading right now at 7 times, and that's still too high?
Yeah, I mean, well, we're a neutral rating, so we think that it's close to fairly valued where it is today. But, you know, as we've seen so far this year, even relatively cheap stocks can get cheaper when momentum's going the wrong way. So when we're seeing data that's getting incrementally worse, we think it's going to be tough for the stock to really recover in that environment until we think we, you know, start to see a bottom and sentiment improve. So that's really what's going on with the stock today, is that even, you know, low multiple stocks in retail can get lower.
Liz, we mentioned the call earlier this morning, and also the pair trade with Tractor Supply. I wonder what you can talk if you can talk about what that says about their customer base and how that results in maybe some relative strength in consumer spend.
Sure. So Tractor Supply actually pre-announced last week positively, so they said that their second quarter earnings are running on track and actually ahead of consensus expectations. So they're going to see sales growth of about 8%. Their EPS is expected to come in at or above consensus estimates. And that was a nice positive surprise. And really what's happening here is that Tractor Supply, given that they are a rural lifestyle retailer, so they're serving a customer base that's seen an increase in demographics, right? People are moving out to more rural and suburban markets. Those are the markets where people can actually afford real estate these days. So we think that the demographics are actually really favorable for Tractor Supply as that migration into those markets continues. Additionally, almost 50% of their sales are in pet and livestock, which are relatively defensive categories. Pet has been one of the categories in our card data that has continued to remain strong on a 3-year basis. It's still growing at a very healthy level and hasn't really decelerated at all. So, you know, pet things like tools and hardware and workwear, which are things that Tractor Supply sells, these are mostly needs-based categories. And so we feel relatively better about Tractor Supply's position in, as you know, as consumers are making these shifts towards prioritizing needs versus wants.